So let's break that down for a minute, Andrew. Like, let's start with, what's in the news right now. Let's talk tariffs, because that's a kind of a really hot topic. I've had 4 or 5 clients ask me directly today, how is this going to affect my real estate?
Here's the real question. Is Trump actually going to do that? Like him or hate him, I've said this, I'm apolitical. This is not a political standpoint. I'm calling the facts. Like, he said a lot of things over the years that have not come true. Like, he'll say things, and it's almost like he's testing the response. I'm going to put a tariff across the board. He listens to the response, gets a whole bunch of free publicity, and then decides if he's actually going to do it. And so much of what he said over the years, he didn't do. Welcome back to REI Hot Seat. Andrew Hines with Jacob Campagnaro here, and it feels like a long time since Jake and I have done an episode.
I know. You guys are running off and filming without me.
More importantly, like, you're usually just in that office over there or taking a phone call.
I know.
But anyways, so Jake's here, which I thought would be good. So we're just going to do a catch-up episode, because the last week, 2 weeks, by the time you watch this one, have been kind of nuts. Like, in the last 7 days here, we've had, the main thing, the tariff that was announced. So Trump is proposing to put a 25% tariff on all Canadian goods. There's been a truce called in Lebanon. I don't know. There was some stuff in the Middle East that were proposing peace, which they're having some market impacts. What the Canadians care about? The Canadian dollar is been hurt by what's happened. So what I thought we could use this episode to do is kind of dispel some of the fears, because there's a lot of irrational fears, I think, from an economic standpoint. I think a lot of people are very confident, and Jake and I were talking market sentiment off camera. Like, people are kind of coming back. Like, a lot of people are pretty positive about where things are headed.
It's such a mixed bag, and that's why I think episodes like this are important, at least
to see both sides,
even
right?
just for me to talk out what I'm seeing in the market and just realize that with what you're seeing and what everybody else is, there's, I think, a big group of people out there that are, they're getting a little bit more bullish on the market. They're starting to get excited. They're coming back. I can just tell from, like, sheer number of phone calls I get a day. Yeah. Right. And in the last 2 weeks, my phone calls have doubled.
That's the big indicator, right? The phone ringing. I've heard
ringing.
The same thing in Florida on our listings and stuff. The realtor's like, last 2 weeks, things have been going nuts. Yeah. It's like, what's going on?
Yeah. And I think there's, a couple things at play there. Like, yes, everybody wants to get in. It's the end of the year. It's Q4, right? Yeah. We got, let's call it 2 weeks of December that are good to do business, and then you're pretty much shot, right?
Yeah.
Like, as soon as you get into the third week of December, that's it.
Yeah, everybody's shutting down.
Yeah. So,
and this week's American Thanksgiving, same thing. Once you hit midweek, no more.
Yeah. And so I think everybody's trying to push to get those last few things through. But at the same time, there's, the rates coming down. We're expected to see another, 50 basis points in December.
And I put money on that we will. 50 basis points, I'm like 99% certain.
I hope we do. Yeah. Yeah. Bond rates still kind of a little bit all over the map. We can talk about that in this episode.
Yeah, historically, like, if you look over last couple of years, like, they do track. As policy rate comes down, like, bond rate does adjust, or it has. Will it track exactly? No, because if you look way back, it used to be fixed rates were 5 and variable rates were 2. That used to be the norm, and then somewhere in the lockdown era, they kind of became the same. It was like fixed rate and variable are the same. Yeah. But that's not normal. So there are many that think we're going to end up with policy rate, the overnight rate, in the 1.75% range, which would put bank variable rates right around 3.75. Or sorry, they're prime rates. So then if you're a prime -1, you're going to be at 2 and 3/4. Yeah. If you're a prime plus a half, you're going to be just 4.25. So that's there are many people who think that's where we're going to end up sometime next year.
Right.
And will bond rates fall to match that? Good chance they will. A lot of that will depend, on many factors, including what happens with oil.
Right. And let's break that down for a minute, Andrew. Like, let's start with, what's in the news right now. Let's talk tariffs, because that's a kind of a really hot topic. I've had 4 or 5 clients ask me directly today, how is this going to affect my real estate? Is it going to, like, interest rates, dollar value? What's going to happen? Inflation, right?
Inflation number one. Okay. So inflation is what you got to be worried about. Well, not worried. Don't worry about anything. Like, obviously, pay attention to things that matter. Worry isn't necessarily helpful.
Educate yourself and
respond to information. accordingly.
Yeah.
Okay, so tariffs are inflationary. The way the tariff that Trump proposed would affect the U.S., first, we'll start with them, is everything they buy would become more expensive by 25%. So all the goods they buy from us, so softwood, lumber, and all that stuff that comes from Canada to the U.S., a lot of minerals, oil, it would be across the board. So in theory, it would be on everything. So that's going to make their oil more expensive. So basically what that does is decrease demand for Canadian products, therefore decreasing demand for Canadian dollar. If you decrease the demand to Canadian dollar, dollar goes down, buying power goes down. So that's obviously going to be a concern because that is inflationary for Canadians. So not only would there be less economic wealth, there's some people predicting it would be approximately $2,000 less economic activity per person in Canada, just based on this across the board tariff. Is that true exactly? I don't know. But one way or another, we do know that it would decrease demand for Canadian products. Here's the real question. Is Trump actually going to do that? Like him or hate him, I've said this, I'm apolitical. This is not a political standpoint. I'm calling the facts. Like, he said a lot of things over the years that have not come true. Like, he'll say things and it's almost like he's testing the response. I'm going to put a tariff across the board. He listens to the response, gets a whole bunch of free publicity, and then decides if he's actually going to do it. And so much of what he said over the years, he didn't do. So will he put some tariffs in place? I'm sure he will. Would it make sense to do an across-the-board tariff when like 77% of Canada's exports go to the U.S. and Mexico is like 80-something? I don't think it makes sense. I think it would be bad for them too because a lot of their companies export to Canada. So it'll be something not as extreme as it sounds, is my prediction.
Right.
However, if it did, I mean, you can imagine like the pause of immigration in Canada, plus the tariff would be like such a recession in Canada. It would be one for the record books. And in that scenario, it doesn't, what does that mean for real estate? It doesn't necessarily mean real estate gets hurt. If anything, given the inflationary environment and the inflation caused by tariffs and our dollar being weaker, we might actually see, real estate go up because assets in an inflationary environment, true assets go up.
Right. And that's what I was waiting for you to say, because I wanted to chime in on that. We've been having conversations like this quite often with a lot of people just calling in, our clients, deals we're doing, sellers of buildings that we're negotiating with our buyers against. And it's just the feedback we're giving them. And it's there's two pools of people that I've seen. There's a lot of people that are thinking, well, the economy is going down. That's it. We're in trouble. I'm kind of with you, and I'm saying, hey, we see an inflationary market. I think real estate values are going to skyrocket.
There's plenty of people who think we've hit the bottom and get in before it's too late. Do you think?
Just a quick question, but do you see if our dollar? So if they do put the tariffs in, and our dollar starts to come down, do you see U.S. investors already looking at Canada? And
there definitely could be,
eyeing it up to see if this is where they want to be.
If the dollar drops below 70, like interesting things start to happen. Yeah, like more tourism to Canada. Of course, you're going to have more investors looking at Canada. There's obviously so many reasons, and I don't have the data to back that up. I'm just like logically thinking, that's gonna open the door. So
no, it's why I'm asking this, Andrew, is because we've had a couple groups lately reach out to us from the U.S. saying, hey, we're actually looking to start investing in Canada, or we're looking to grow our portfolio.
Well, even
in Canada,
just this
which
week, they're getting a 3% discount because their dollar buys so much more. Yeah. And it takes time for the market to respond. Side note is just like the government does with economic easing or quantitative easing when they're either buying or selling bonds, like depending on whether they're doing tightening or easing, to manipulate bond yields. They do the same thing with currency, although they don't advertise it. They hold foreign currencies. So if the dollar drops too low, they'll sell off their foreign currencies for Canadian dollars and drive up the demand for Canadian dollars to drive up the price of Canadian dollars. So it seems very much like the Canadian government is trying to keep the dollar where it is right now. Yeah. So I mean, there's only so much they can do there, right? I mean, if it's a windfall, obviously the dollar falls. But I think that they're going to try and do what they can to keep it where it is.
Yeah. So would you say if there's an asset class people should be considering buying right now in the Canadian market?
Well, you want hard assets and you want cash flowing assets. And you got to remember in the short run, like anything can happen, right? In the next couple of years, like it could be volatile. But you can't change the fact that that it's pretty much hard anywhere to buy houses at less than their cost to replace.
Right.
Or sorry, at more than their cost to replace. Right. So it costs a lot to rebuild a house these days. So if you're buying at less than the cost of replacement, you're already getting a deal. Well, that's only going to become more and more true the more inflation we have. Where are all the people coming in going to go? Yeah, for the next couple of years, we have a pause. Mm-hmm. But we don't even have enough houses for them.
Yeah.
So as they bring more people in, like it seems to me the only future for real estate is up. Like, and just like it always has been, right? It's volatile in the short run, potentially, but up in the long run. Mm-hmm. And we've seen that the last couple of years, down 20%, but it will recover that eventually.
But we're down 20%, but we're still up on call it a 10-year average?
You're up on a 5-year, up on a 4-year even.
Right. So I know there's a lot of people hurting right now, and this is a tough time, and there was the adage survive till 25, and I actually think it's going to be survive to 26 now, right? Because we haven't seen things adjust as dramatically as a lot of people were hoping.
You think people were hoping for more of a real estate correction?
I think a lot of people were hoping a bigger correction at this point in the market, but I think we saw more increases in interest rate and quicker increases in the rate than most people expected. Right? We're talking back when things started to climb, right? Now we're seeing things come down. I think we're going to be going into 2025 with a similar market. Right. I don't think we're going to see things switch overnight. Yes, another 50 bips. If it does happen, that'd be great.
Yeah.
But that's not a direct correlation to multifam value and
but it is a correlation. I mean, you could argue it's fairly direct.
It is, but it's not an overnight correction.
Nope.
Right. And we've heard this from a few of our landlords where they're like, hey, rates are coming down. My building's worth more.
Oh, yeah.
And we say, well, I'm sorry, but it's not. Right.
No, it doesn't happen overnight like that. The market still is looking in the rearview mirror. They're looking at the last 90 days, last 180 days, like what's transacted, it takes time for a small rudder on a big ship to turn that ship. And that's interest rates and values. Mm-hmm. And the market still to that point has not adjusted downward to the interest rate hikes, and they're already dropping the interest rates. So, that some of the effect that would have been felt is not going to be felt, obviously, because they're doing this. I had a point I was going to say about the interest rate drop, but I mean, just look at it this way. If you're not immigrating the people, the only reason GDP was growing is because of the massive immigration.
Right.
That was the only reason. So if you're not immigrating all those people, then we're going to need monstrous cuts just to keep GDP growing, or not even falling. Mm-hmm. So even to just keep it stagnant. So keeping that in mind, that means interest rates come down. What becomes more valuable? Real estate, typically, right? Like, we saw it with when the rates started to go up. It took a little while, but real estate just kept kind of trickling down, coming down. Sentiment changed, and now I believe we will see that in the opposite direction, unless something major changes in the world economic outlook. And
with there's obviously it's a little unstable right now, but as of right now, within the last 2-3 weeks, I would say sentiment is shifting towards pro real estate, more bullish in the multifam market. Yep. We're starting to see, again, the phone's starting to ring, and we've been preaching all year, and we're going to continue to preach, fundamentals of multifam investing, right? Cash flowing hard assets, like you said.
Cash flowing is a big thing. Like people who followed me for a long time know I was like into gold, still love gold. I find it impractical to store, but that's a hard asset, but it doesn't cash flow, so I don't like it for that.
Right.
It's a store of value. Real estate, if you do it right, can pay you and preserve the value of your money. And that's why I love it. I mean, of course, the ridiculous part is that it'll go up in value, but not real value. It'll just inflate, and then they'll tax you on the gain. I mean, you can't win them all, but it sure is better than just holding on to dollars.
Well, there you go. Then diversify, right? Yeah. So you have your hard asset in multifamily real estate or whatever real estate you want to buy. You have your vault of gold in your basement somewhere, right? You can buy some artwork.
You got to hide it John Wick style.
Yeah,
in your floor.
And that's going to be the best way to hopefully ride out the uncertainty of the market, right? Is again just basics of investing.
Yeah. Not too much concentration in one area, right?
Yeah.
Like, so you have your real estate. I mean, I say that being like a purely real estate guy, like, a little gold and such. But
I think majority of your portfolio, should be real estate. That's at least what my belief is. And again, I'm sure there's people that are going to disagree with me out there. I think a portion of my portfolio, you can have some stocks, you can have, again, gold, you can have vintage cars, whatever you want to do, right?
Make sure it pays you, right?
Yeah, there's different assets out there, but again, if you can get a small little portfolio going of generational multifam assets where you can give these to your kids, you can run it as a business, right? And proper, where it's actually cash flowing, right? And I can't stress this enough, is that exists right now. I'm shocked that we still have people calling us constantly going, there's no deals. It's something I hear so frequently. And I'm going on a tangent here.
But we were just talking about this the other week, and it's like, there are only no deals because you haven't seen enough deals.
Or you're just not looking.
Yeah, exactly. That's what I mean. You haven't seen enough deals, so you don't know what a deal looks like. And that was my comment about, like, I sit with you guys and I see all the deals you're working on, and then not all, but I see a lot of them, and then we talk about them on the show, and I have a good finger on the pulse for what's a deal in the market. And the cash flow I've seen, it is there on certain deals, right? Sure. Like you can put together excellent deals in Ontario right now. You could buy into the hype of, the anti-landlord sentiment and all that. And yes, that is a factor, and that is nothing more in my mind than a business line item. You need to price that into the way you do business.
Yeah, it's how we build our performance, right? How you're going to analyze that deal.
Yeah.
And it's, if you spend an hour on realtor.ca and then come to me and go, I can't find any deals. That's, come on.
You got to talk to the experts, right? Like, one thing I've learned in my years on this planet is, especially being in business of real estate for the last 15 years, pretty much now, is you got to work with experts. Don't work with people who are sort of good or have done a couple of deals. You want to work with people who live and breathe that stuff, because you'll learn more in an hour with those people than you will in 6 months with the other people.
Well, it's you've heard it time and time again. Just get in the room with people that know more than you, right? I'm constantly trying to do that, right? I'm trying to find those rooms. I want to get in there. I want to just be surrounded by people that I can learn from, and that's hopefully what this show does for our listeners as well.
Well, 100%. Like the wisdom, this didn't exist when I started in 2011 when I bought my first properties. I didn't know of any shows like this. Certainly not in Canada. Maybe Bigger Pockets was already a thing. I don't think it was. If this information had been available to me then, good Lord, where it would be now.
Yeah. And listen to multiple, get different points of view, get different market updates, get different investment strategies. But anyhow, that was my tangent. I don't even know where I was going with it, but I wanted to get that out, because when we're talking about this, and market sentiment is again, if you have capital or you have equity in your property, just call us. We can build some sort of strategy, right? I'd hate to see it be too late. We're getting into end of 2025, and now people are going, okay, now I feel comfortable investing, and all of a sudden the market's starting to go up, and you kind of missed that boat. So anyways, cash flowing assets,
that's where it's at.
Key to your portfolio.
Be ready to weather the storm. I mean, everything's real estate's volatile in the short run. Any stock, any asset at all can be volatile in the short run. But that's why you want to make sure it pays you. You want to make sure you're not spending your last dollar. And then when you buy real estate, you always want to make sure you have a reserve in your account so that you don't sweat about calling a plumber or all that stuff. I say that a lot less on this show than I used to, because I think most of the people get that who buy this type of asset.
I hope so.
Obviously, you're buying $1 million building. You're not just coming in with your down payment. You do need to slap a couple grand in that account. Sure. A little bit of a float.
Right. But okay, so Andrew, so that's and we don't want to run too long, but that's potential tariffs.
Yeah.
What else are you seeing in the market that you think is going to directly affect it over the next 3-4 months?
Directly affect real estate?
Yeah, real estate, anything, just general market, right?
I just think, there's so much inflationary talk. Most of Trump's policies are going to be inflationary. We talked about that a few weeks back. You can still like the guy if you do, or if you don't, whatever. But just calling a spade, it is going to. So it could be better for the American people in the long run. In the short run, it's going to hurt them. It could hurt Canadians. But that's why I think a lot of this is market testing, a lot of what he's saying. And that's my recap on that. Just watch out. I think that we are going to see a little bit more inflationary pressure. I don't think that necessarily means that they increase the rates, because I think the Canadian government knows they got to decrease them because of the economic outlook. So knowing that's coming, I'm hoping for the best. I'm hoping for some good policies that keep things moving. But my sentiment is let's get into more deals. Like I want to have my name on more real estate to hold and keep in the long run. So a lot of what we're doing in the U.S., like we're of course doing the short-term flips, but we're having conversations about, okay, now it's time to get into stuff to keep.
Love it.
Yeah.
Okay.
All right, guys. So if you enjoyed the show, if you get value out of this, I highly recommend that, of course, you show the channel love and, like it, subscribe it, and tell us how awesome we are, or just tell us whatever questions you have. We did have some people that asked some questions in recent episodes. We'd love to answer them on the show. So go ahead and put them in comments. And we are.
Do we have any questions we want to answer right now?
I don't. We answered them already. But
okay, next time, ask more questions, guys.
With that said, REI Hot Seat Insiders List. You want to make sure you're on that, because that's what gets you into the world of Jake and the investments group team. So Dave, Zach, Brad, all of them. So those guys live and breathe multifamily, and they do a lot of deals that don't ever hit the market. So you're going to want to be on that list if you want to know about deals that are good deals that don't hit the market.
These are where the deals are, right?
Yeah.
So you're getting the REI Hot Seat deals. You're going to be getting the deals that we don't do here. Maybe they don't make it to the REI Hot Seat because we don't have enough time to film.
There's too many deals to put them all on the show.
So you're going to have instant direct access to that with performance already done for you. On top of that, we do have market updates. We have bond rate updates. We have video links to these videos, so you don't have to go searching for them. It's really going to be the marketplace for off market multifam. And that's what we're building right now. So, join up. Yeah, we'll get you on there. And then again, we can always do an intake call. Would love to speak with you, learn about what you're looking to do, and build that action plan.
And we're also going to be I'm going to be a part of it, although I'm not writing the script for it, but we're doing a course on commercial buying. So a complete commercial buying guide, which this is just something we've been talking about, would be such a value to the buyers. Because, what if we just had one course where we answered, all those poignant questions in one spot? And that's what's coming. So make sure you're on the list so you have access to that too.
Amazing.
All right. Thanks, guys. We'll see you again next week.